are helping build a sustainable foundation for long-term profitability. And looking ahead, we expect to make continued improvement as we drive greater leverage across the business with our focus on our path to profitability. In the next slide, I want to spend a little bit of time talking about the balance sheet and how we manage inventory. So managing inventory and the balance sheet in aggregate remain central to our risk management approach. In 2024, we continue to make meaningful progress on this front. Our team invested in improving demand generation, forecasting accuracy, pricing strategy, and market level insights, all of which allowed us to aggregate demand more efficiently and reduce inventory. As a result, we brought a total real estate inventory down by 30% from 85.2 million to 59.4 million, a clear step forward in capital efficiency. And I want to be clear that we still expect to carry inventory on balance sheet for the foreseeable future, but our focus is to do so in an efficient and more data-driven way. And part of improving capital efficiency includes optimizing our loan to value, or LTV. In 2024, our LTV decreased from 82 to 67%, primarily due to the full repayment of a mezzanine debt facility that matured in July. Now, our goal is to maintain a target leverage between 70 to 80%. So to that end, we're pleased to share that in February 2025, we secured a new financing arrangement with a third-party financial institution, bringing our LTV back up into the mid-70s, which is right within our target range. And just lastly, one point on liquidity, because it is critical. As of 12/31/2024, we had 27.7 million of cash and cash equivalents, 19.76 million of equity in real estate inventory, and another 6.3 million of receivables from customers. Now, these assets reflect our ability to recycle capital as we sell shares and demonstrate that we have a strong liquidity position relative to our operating needs. And so with our current cash position, anticipated proceeds from Reg A, and a carefully managed cash burn rate, we believe we're well capitalized to fund operations through the coming year. Of course, we recognize there's a lot of macro uncertainty and these conditions remain quite fluid. So we will continue to manage liquidity and our capital deployment with discipline just to ensure we're flexible across a range of market scenarios. And just to talk a little bit about Reg A, we're super proud to share that our Regulation A offering has raised 15.9 million as of 3/31/2025. And we've reached this milestone really ahead of schedule. More than 4,000 individual investors have participated with an average investment around $4,000. I think this broad-based support just underscores both the accessibility of our platform, the enthusiasm it generates across a wide range of investors, and we're just very thankful and grateful to all of those who have invested thus far. Our current share price is $2.80 with a minimum investment of just over $1,000, and we've intentionally kind of kept this round inclusive, creating a path for more people to participate in the future of co-ownership. The photo here of Austin was taken in Times Square at NASDAQ, and I think it's just a visual reminder of how far we've come and visibility into our mission really gaining momentum. And again, I just want to say we're very grateful to the thousands of investors who've joined us. Thank you. And we're excited about the opportunities ahead as we continue to drive growth and deliver value to our owners and shareholders. With that, I'll turn the call back over to Austin to talk more about growth priorities.
Thank you very much, Al. I just want to build on the comment that Al had just a moment ago about thanking all of our investors who are supporting us and who believed in this exciting mission from day one. My co-founder, Spencer Raskoff, who, if for those of you who don't know him, he was co-founder and 13-year CEO of Zillow, where they built about a $20 billion market cap company. And Spencer talks about how one of his biggest regrets when taking Zillow public was that they didn't give everyday investors access to the opportunity early on. And that experience really inspired, our idea for this Reg A offering, and it feels really cool to enable, basically anyone to participate in our journey and be on this ride with us. So very excited about the initial momentum and super excited about the remainder of the raise. Speaking of which, for those of you who are invested or considering investing, the proceeds are going to growth. So growth is really about expanding our reach, broadening our audience, adding new markets, many of which will be in those international destinations that I alluded to earlier. It's also about continued product innovation. I mean, tech is sort of the backbone, of the whole thing. And there's a lot of opportunity that we continue to have to create great experiences for our customers. I talked about Swap as one of the big ones that I'm really excited about. And, Swap in its first release, in the tech world, we have this concept called MVP, which is an acronym for minimally viable product. And when you release an MVP, the goal is to get a product to market as quickly as possible, but not necessarily the best version of the product or the most feature-rich version. And that's what we did with Swap. We wanted to bring Swap to market quickly, so we launched with an MVP, but its first form is pretty limited. And the opportunity that we have to expand upon Swap and just radically change the game to deliver incredible value for our customers is abundant. And I'm really excited for our customers to experience all the really exciting things that we have in store with Swap and much more. And the final thing is about delivering on our mission. If technology is kind of the backbone that holds it all together, to use another metaphor, the old stool metaphor, our customers are the legs of the stool. And one of the things that I'm most proud about in our results is the fact that about 40% of all of our new business comes from our customers, either repeat customers or referrals. Lots of our customers refer other people, friends, family members to the Pacaso model. We also see a lot of customers going from an eighth to a quarter, either because they want, a different home, or they want more time in a particular home, or better dates in a particular home. So that's really cool. And we're going to continue to focus on that. We believe that, happy customers translate into a great business, and we will never lose focus of our customers as we think about growth and scaling this business into perpetuity. Just to close here, there's a bunch of reasons why I think the Pacaso story and the Pacaso opportunity is unique. I'll talk about a couple of the reasons, but just know that the list is more exhaustive than what I'm about to share. The first is the team. You can't have a great business without a great team. It's really hard to assemble a great team. It oftentimes takes, a decade for a team to be well-oiled and very experienced and able to perform at a high level. I feel very fortunate that we were able to create a high-performing team right out of the gate. Most of the people who joined us early on were people that Spencer and I had worked with over the course of the last 15 years at my prior company or at Zillow, Spencer's prior company. And over the course of the last 5 years since building our business, we've just been able to strengthen the team in such a powerful way. So this is a super seasoned team of real estate and travel leaders who have created tens of billions of dollars of market cap for shareholders during their careers. So that's number one. Number two is the product market fit that we have with our customers. This is another thing that can take a long time for a new category creating company. It's not uncommon to take 5-7 years before a company finds really strong product market fit. We were able to find strong product market fit right out of the gate and continue to perfect that product market fit by delivering on more features, more benefits, better experiences through things like Swap. And that is an ingredient for a great business. The final thing that I'll say just relates to the big picture, long-term opportunity. I mean, there's an opportunity here to enrich the lives of millions and millions of people. Think like what Airbnb has done in the rental space. I think we have the opportunity to do that in the ownership space. And 2 weeks from now, we're actually hosting our annual, what we call All Crew Retreat, where our whole company comes together. to kind of talk about the year to follow and recharge, and it's a highlight for our year. And one of the things I had an opportunity to do in anticipation of that is sit down with Howard Schultz, who many of you know as the founder of Starbucks. Howard's built one of the most iconic brands. I think he's got about 500,000 employees at Starbucks, $100 billion market cap. Howard is an investor in Pacaso and a personal friend and mentor of mine. And I sat down with Howard to interview him for this retreat. And at one point in the interview, I was asking him about the kind of the third place experience. You know, Starbucks is sort of known for coffee, but it's not really the act of selling coffee that makes Starbucks special. What made Starbucks special is kind of the community and the connection that the Starbucks third place location created for people. And Howard describes this as humanity. It's humanity that people are connected to. So in the interview, I was asking Howard about, you know, his learnings about the community and the connection and the humanity. And he actually went on to talk about how he saw in Pacaso the same opportunity that he saw in Starbucks early on. And I think it speaks to the big picture opportunity that we have long term. So I just wanted to play a 45-second clip from this interview so that you guys can hear it from Howard firsthand.
And when you described Pacaso to me for the first time, we were in my living room at home. What came to me is when you started talking about enhancing people's lives through a secondary vacation home or another experience like that, what I saw immediately was the thread of what we've been able to do, and in a different way, what Picasso's enabling. Yeah. And I think that sense of humanity and enriching people's lives, enhancing people's lives through a second or third home, and the way you've done it in terms of the economics of it is a beautiful thing. Now, I know you've had challenges because of interest rates and everything else, but that is what drew me to the company and the passion that you had for enhancing people's lives.
All right. Well, with that, I want to turn it over to Q&A, but I just want to remind everyone that our Series D fourth round of capital is open. You can invest at pacaso.com/invest. For your convenience, we put the link on the screen here, so feel free to check it out if you're interested in learning more. Operator, we'll take the first question.
Great, thank you. First question is, interest rates have stabilized relative to last year, but consumer confidence remains mixed. Can you share how the profile of Pacaso's typical buyer has evolved over the past 12 months, particularly as it relates to price sensitivity, financing behavior, or preferred destinations?
Yeah, so there's a few questions packed into that. First thing that I'll speak to is the buyer and how that has changed. As I mentioned in my remarks, we're really laser focused on high net worth families who want luxury homes. So that is how the profile of the buyer has changed. A couple years ago, we had kind of a broader menu of potential markets with lower price points that attracted a broader audience. Today, we're very much focused just on luxury homes that are in the 3 to